This is Today in Money. I'm Jim Goddard. My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Bob, welcome back to Today in Money.
Yeah, Jim, good to be with you. Of course, it's Friday morning, and it's lovely and sunny out there. A little on the warmish side, and also there's a bit of the humidity around, but I think as the day progresses, it's just going to continue nice. And then I think in a few days' time, we might get a rain.
Yeah. Well, of course, we've had warm temperatures. It's summertime. Thank goodness.
Yeah, that's the way it goes. And then you had these heat domes being parked, high-pressure areas for they're stationary, and then in the heat dome, the temperatures can go up. Yeah, oh yeah.
And Greater Vancouver mostly spared from the forest fire smoke from the interior so far.
Yeah, there's been some days, but it's not eye-watering stuff. So
gives us nice sunsets.
Oh yeah, yeah.
Now, some people are saying the U.S. government debt hitting $40 trillion is perhaps starting to sunset on the U.S.
Oh, it's a huge debt. But then you have, in a great financial bubble, which is what we've been talking about, you get huge debt. So the stock market may be the focus, but you get action in commodities and you get debt, and there's huge amounts of junk issues being done, and many of these companies will default, and junk is going to go no bid. And the other problem, Jim, is that investment-rated corporate bonds, they can get balance sheets offside and then get downgraded to junk. So there is going to be a huge amount of junk out there, and many, many defaults and failures. It's the way it works.
Of course, Bob, it would be nice if you could polish up the crystal ball and tell us when this fall or correction in the markets happens, and is that the time to start shorting?
Well, we can deal with probabilities. And earlier in the year, like January or something, we're looking for the markets to recover into mid-year. And then in March, you could see things burbling up, and that's when I realized, hey, this could be the climax of a great financial bubble. And as they have occurred in New York in 1929, the best was on September 3rd, and then the 1873 bubble, and as it occurred in New York, we know that it was in September. September of that year, and by the end of September, it was falling apart. Now, there's other probabilities that one can deal with, and that is if you're going to have an immense dislocating credit crisis, it'll likely happen in the fall. And, you've got a couple hundred years of this. And then I had a book by an Italian historian, Cipolla, and he was reviewing mortgage debt and stuff in Florence in the 1300s. So I was reading through that, and there was a panic and a crisis in the mortgage market. Guess when? In the fall of the year. So there's plenty of evidence recording that great crises are discovered in the fall. So, these patterns, Jim, are interesting. And so if this rolls over and there's charts, there's sentiment figures that are, really straight up. Then there's been the high-flying sector. And so it really does appear to this historian like we have we're at the conclusion of a great financial bubble. And as we noted, this is number 6. 1929 was number 5. You get the picture. 1873 was number 4. And the first one was the South Sea bubble in 1720. And that was, they just invented that one out of thin air. It just happened. And you had stocks being floated on new things, high tech. Somebody had floated a stock that had a new way of making sailcloth. But hey, it was a hot issue. So, and then you had the next great bubble, 1772. The man of letters, Samuel Johnson, said something ironically about that, when everything is to be done in a new way. And then you had the 1825 bubble at the completion of the Napoleonic Wars, and then as I said, we get 1873 to 1929, and it's looking like this year. So, very interesting time for me.
Now, we've had, I just took a look on Google and asked how much money invested in AI. Globally, $1 to $2.5 trillion in the U.S. alone, $581 billion. None of this AI stuff is making money yet. Is this going to be a case like we saw with the .com bust, where if you put a .com behind anything, people would pour millions of dollars into it, whether it made money or not?
Oh yeah,
is
Jim,
this? Are we going to see huge failures here as well?
Yeah. The .com is one, and then I was going through some history here the other day on a crash, and this was a 1618 crash. And and Alderman Cockayne was advising the Crown. Cockayne's plan had the Crown trying to control the cloth trade and move its finishing and manufacture to London from the Netherlands. Of course, the defiance of market forces brought its usual retribution. During the crisis, the Archbishop reported that the King said, "In cold blood before ye council table, yet if he had advised him by wrong information, his 4 quarters should pay for it." At which, continues the Archbishop, ye poor aldermen stood infinitely amazed. Well, his 4 quarters should pay for it. That means having very strong draft horses, pulling your leg off, the other leg off, an arm and whatnot. It was pretty grisly stuff. So that was being quartered, was being torn apart by draft horses. So they had severe punishments in those days. And but the problem with a great bust is the punishment done on the general public, who typically have come in near the top. And then you also typically, following a great bubble, you have a Great Depression. As a matter of fact, the first use of the term by economists was the bubble of 1873, and by 1880, the business conditions in England were unusually weak, and economists there began to call it the Great Depression in 1880. And then, of course, you had that depression bottom in 1895, and then the next long expansion set up 1929. So the history is fascinating. So, yeah.
Now, today the news is Donald Trump is taking the tariff off imported ground beef. Is that because ground beef is one of the items used in the CPI index, so that would help bring down the official inflation rate?
Oh, I don't know how it fits in, Jim. This is new to me.
Yeah.
But, we've been force feeding the credit market, so there's a lot of lolly out there to bid up prices. And certain places have been strong, certain other departments not. But the main thing is that great financial crises are discovered in the fall of the year, and that's what we're going into. So,
yeah, so much for the summer of your discontent.
Well, actually,
wait till fall happens.
Most of them had their worst in October, sort of cleared and settled down in November. But following the 1825 bubble, it just kept going. The crash kept going right into January. And there's comments by governors of the Bank of England about not spending Christmas with their family because they were attending to a financial crisis, as I said, right into January of 1826.
We'll take a look at some of the headlines that caught Bob's eye right after the break. Always consult your investment professional before making any investment decision. Today in Money is archived on YouTube at Talk Digital Network. Welcome back. We're speaking with Bob Hoye. Our first headline comes courtesy of Zero Hedge. Hedge funds bought stocks every day last week, second fastest weekly buying spree of 2026.
Yeah, very up headline, got strong action.
So the hedge fund managers haven't lost faith in the stock market yet.
Well, they're buying. They figure they're going to make a fortune. It's going to extend.
Headline from Zero Hedge. Wall Street Journal catches up, discovers AI's off-balance sheet liabilities are $3 trillion and growing at $1.2 trillion per quarter.
Yeah.
Wow, that's even
I
worse
like
than
that one. $1.2 trillion growing per quarter. This is insanity. But it won't be recognized generally as insanity until after it busts.
Wow. So AI generated Google said that the amount invested in AI 1 to 2.5 trillion, but here, of course, is more than just investments. It's entire companies' futures on the line here. Yeah, so it's bigger than we even originally thought. From Zero Hedge, we have the headline, amid global bond bloodbath, Goldman Delta One Desk warns Fed may be forced to hike rates.
And this always gets us into the thing is that, again, if you look at the history for a few hundred years, short-dated rates, interest like Treasury bills or the equivalent, they go up in the boom and they go down in the bust. So rising interest rates, short end, is good. And then if you get interest rate falling in the bust, falling interest rates are bad. And this is what that the establishment gets a little nervous about their positions, and they think that the Fed cutting rates will help them out. But we had a high for T-bills a little while ago, but nothing coming down that would say anything. Not yet. But we watched that, and when a good downtrend is set in the T-bill rate, it's saying, watch out. Because, well, for example, in 1929, the 3-month Treasury bill in June that year was a little over 5%. And then in July 1932, which was more or less the end of the first collapse, and the T-bill rate was down to 0.08%. So the T-bill rate had fallen to nothing in a horrendous crash. So, if you look at evidence, T-bill rates going up is good, and T-bill rates going down is bad. But they're not in a downtrend yet, but we watch it closely.
From the American Thinker, if Democrats walk like socialists, talk like socialists, maybe they're socialists.
Yeah. Well, they are. And what is the step from socialism to communism? In the past, it's been irresistible, and in Russian, Moscow, there's no distinction between socialism and communism. So I like the line here. Yeah, that's a good one.
Well, I mean, we're taking a look at the election of the new mayor of New York, Mandani. He is even left of left. He wants to socialize so many things. But in Canada, if we take a look at the states, we're going, why don't you have government health care? Everybody else in the world does. Why not the U.S. as well? I mean, what our conservatives in Canada would be called socialists in the U.S.
Oh, unfortunately, yeah. Canada politically lost its backbone a whole long time ago. And Ottawa is corrupt and want to control things, and they have to take your taxes in order to tell you what to do. So, no, Canada is in very bad shape. The Trudeau years really destroyed the economy, and it drove a lot of investments into the U.S., which they don't like. And so Trudeau left, and the severe decline in the U.S. dollar, or the Canadian dollar, ended, and it recovered. But what you have here with Prime Minister Carney, he was the backbone behind Trudeau. He was Trudeau's advisor. And Carney is a climate zealot. He's a green freak. He wants to control the global temperature by changing the amount of CO2 that he can change. I mean, they're even talking about setting up a special plant to take CO2 from wherever and pump the CO2 down into an old oil well. I mean, this really is a form of madness. They haven't got a clue what they're doing.
And our final headline here from Canada Exposed: Vancouver condo buyers destroyed, sued for life savings.
Yeah, it was a great housing bubble in Vancouver and also Toronto. And it was eventually became a one-way market straight up. And then also there was a lot of bad stuff going on with money laundering and Asian and all that sort of stuff. And I think the high was in 3 years ago. Anyways, that November, we published a couple of pages on the real estate bubble, mainly focusing on Toronto and Vancouver. Now, the other thing I noticed when I wrote that one is that I found an index for recreational property out in the country. And it was doing the same thing as property prices in Toronto. So you've had the great bubble. It's falling apart.
Bob, in the headlines that you sent to me, you had a nice little bit at the end of the article called Political Definitions. Maybe you could go through those for us.
Yeah. This is by Thomas Sowell, Sowell, who is a powerful intellect, and he's still alive, but he's 96 now. I had to look him up. So you got these political definitions: compassion, the use of tax money to buy votes; insensitivity, objection to the use of tax money to buy votes. Then special interest lobby, politically organized conservatives; public interest lobby, politically organized liberals. And that was Thomas Sowell, Sowell. He uttered some great observations, and I looked him up, and as I said, he's now 96 years old. So, great guy to follow. You look for quotes by Sowell. Yeah.
Bob, thank you so much for being on Today in Money.
And Jim, good to be with you and our audience out there. And you know I can never figure out where they are, but I'm happy with them.
We call it Cyberland.
Cyberland, okay, that's good. I'll try and remember that for next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howestreet.com. Find us on X @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening. Comments made on Today in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Today in Money is a production of Howe Street Media Incorporated. Executive producer, Tom Allen.